Nothing said on the Hivemind is a recommendation to buy or sell securities or tokens. This podcast is strictly for informational purposes only, and any views expressed by anyone on the show are solely our own opinions, not financial advice. Hi everyone, and welcome to another episode of the Hivemind podcast. This time we're going live, trying something new out. So, as always, the goal of the podcast is to provide an inside look into what we like to call the Delphi Hivemind, bring together some of our brightest minds from each of the divisions to share insights, alpha, and shitposts. Today with us, we have the usual cast: Ceteris, who heads up our institutional research arm; Jan, who heads up our managing partner at Delphi Ventures; and Ventures associate Duncan, also known as Flood Capital. I lead Delphi Labs, our protocol R&D arm, focused on incubating and accelerating new Web3 primitives. All right, it looks like we're live. Maybe everyone should go tweet this just to make sure we're not just talking to ourselves.
No, we're we're live. I see it. We have 27, 29. You can see the number clicking up there.
Oh, no way. That's dope.
Yeah.
Welcome, guys.
Wow.
You can actually see there's 2 watching on YouTube and 34 on Twitter. I wonder though if on Twitter it's just like if it's like in their section or if they click into it. Anyways.
How do I go on to, because we should probably look at these comments. People are going to be
all these
insulting
comments are
us.
about some shitcoin, which is like the majority. These are the majority of our XAI42P.
XAI42P. Yeah, changed a bunch of people's lives according to the comments. Duncan, our shitcoin scavenger, what say you? Should we ape some XAI42P?
Sounds like another one of Elon's kids.
Yeah. All right. Should we start off with markets? Alts are getting wrecked right now. What's happening? Who wants to start? Maybe on the latest with markets. Jan?
Yeah, we had the fake out temporarily on courts blocking tariffs, and then that got undone in 12 hours. Seems like the majority of the bid has been coming from these treasuries, the company treasuries buying, considering we haven't really seen a great deal of alt strength, and then the stuff that we have seen, I guess thinking about ETH has been on the treasury announcement and kind of probably some front running of it. So yeah, those seem to be the primary driver, and then you have these like periodic dips in BTC dominance when alts go for a little run, but the second BTC pulls back, the bid is gone everywhere, and you get double-digit percent candles down.
Yeah, this is like the story of 2025. It's just like BTC dominance grinding higher. Even during the tariff stuff, right? Like BTC's bounced back to new all-time highs. And I think only like major coin was Hype who made new all-time highs. But it's even down like 25% off those already.
Yeah, I think like ETH has been not bad over the past like month. Sol has been pretty bad. It's basically just BTC and Hype. I think the meme was like BTC Hype Sol. Now it's basically BTC and Hype right now.
Started off as Hyena, right? Hyena was all you needed.
Yeah, that's not.
Pain.
Yeah, Sol's been pretty weak.
Which is interesting because you have a lot of those treasury plays buying Sol and buying like the lock Sol and everything.
But like,
Yeah,
I mean,
They haven't.
With like an intro to these treasury plays. Like I think there's one popping up every like second day now that are doing these treasury plays. There's obviously the OG was MicroStrategy. Then there was a bunch of people doing it. Trump announced one. There's like Metaplanet in Tokyo. There's Sol Strategies and Upexi and stuff. Maybe Jan, you want to like just summarize what they're doing? There's also a lot of people saying this is like the next existential risk for crypto, or the next bear market's going to be caused by, I guess, like liquidation cascades of these treasury vehicles. You want to like cue it up and then give your thoughts on it?
Yeah. So, equities have this natural gravity going higher from the biweekly bid from 401ks and retirement accounts crypto kind of has the opposite scenario, right? Where we're long-term bullish, but you're kind of always thinking about, who's going to be bidding in the next couple of months. And the story has been these treasuries buying, right? And so it's important to kind of understand how these things are capitalized, and I think that helps you kind of understand the length to which this can last and what happens. So why are people giving these companies money to buy these assets? So if you look, the primary buyer of the convertible debt are convertible arbitrage or convertible debt arb funds, right? So what they do is they buy convertible debt and then they'll short equity. They'll short the equity and kind of and that's their general exposure. There's a lot of kind of legs to how they make money, but the important one for this conversation is volatility. So you've always heard sailors say we're selling the product is volatility, and he's right. How it actually manifests is basically, so these funds buy the convertible debt and then short the equity, and so they're delta neutral. But what they'll do with this volatility is they'll harvest the vol. So the convertible debt position is debt and then a call option on the equity. So as the equity goes up, they need to short some stock, and then as the equity comes down, they will buy. They'll like reduce the short by buying. So as the debt position increases in value, they'll short more equity to get delta neutral, and then conversely they'll buy. So what they're actually doing is selling high and buying low, right? And so they're kind of what's called as gamma clipping, basically. So gamma scalping rather. So what they're doing is they're constantly buying low, selling high, and the more volatile the stock, the better it is for them. So they're not super concerned about the actual price itself, but more so the volatility of the product, and that creates an opportunity for them. And these are buyers. You have your Citadels, your Millenniums. They all have their kind of specific strategies within their multi-strategy funds. Then you have convertible debt arb specific funds, and so this is really attractive because this product is very volatile, and so they're able to generate a lot of returns on it, and they're the primary buyer of this convertible issuance. If you look each time, that's who the buyer is. What's also unique about these, about like MicroStrategy in particular, is that they have this leveraged single stock ETF. So there's a 2x leveraged MicroStrategy ETF. So on top of Bitcoin volatility, you also have this thing adding to the volatility. And so basically, so the convertible debt arb funds are suppressing volatility, right? Because they're buying the stock when it comes down and selling it as it goes up. But the ETF is actually exacerbating volatility because you put in $100 into this ETF, it has to go borrow $100 to go long. When MicroStrategy pumps 10%, the position is now $120 of equity, 110 of debt. So they need to go out and borrow $20 more of equity of debt and buy MicroStrategy. So these levered ETFs are actually buying tops and selling bottoms, and they are exacerbating the volatility, which is feeding into the harvesting that the convertible debt arb funds can do, and just that's why they keep buying. So there's basically so far it would seems to be an endless source of demand for this convertible debt, and even more so, like they'll offer these the convertible bonds with crazy high strike prices, and the reason that's attractive for it seems kind of nonsensical if you're looking at it from the surface, but the reason being is when you're selling this debt, the strike is a call option, right? And so if it's really far out of the money, it's very cheap. So it allows these buyers to actually pay less for the bond and have more price appreciation and other ways they can generate return. So they're basically the primary ones buying, and yeah, it's been, you could see like short interest kind of go up in lockstep with all of these issuances because that's the game that these convertible debt arb funds are playing. But they're going to keep buying because the returns for them are mostly volatility based and to some degree Bitcoin, but they're less concerned really about that.
Yeah, and then the other piece is the equity, which is like the main component for MicroStrategy has been the equity. I think I just looked up, they've done 7.3 billion via convertible debt, and then
they own 3% of the Bitcoin supply. Like MicroStrategy owns like 2.8% of the Bitcoin supply right now.
Yeah, but it's kind of just like another ETF in a sense. It's not like Saylor himself owns all of that, right? That's where I think people get scared because they're like, "Oh, Saylor owns 3%."
But he
It's
has
like,
the
no.
voting shares, so
Sure, yeah.
Yeah.
I guess the risk
under
with
what-
MicroStrategy
yeah.
is that it would just trade at like a steep discount, and then shareholder activism would kind of like try and
Yeah.
force liquidation, right?
Under what? Yeah, exactly. So that's what I wanted to maybe dig into. Obviously, a lot of these have different debt structures, and they're not always transparent, like the Solana and ETH ones. But for MicroStrategy, which I guess is the one most are based on, under what circumstances would they have to sell their Bitcoin? As far as I understand, they would literally have to get sued by shareholders, right, to sell their Bitcoin, because the convertible just converts to equity. And I guess if at some point the equity is trading way below, like this thing's trading way below net asset value, then shareholders can sort of demand that they sell some Bitcoin and buy back stock. Is that basically the way this would go down?
He's kind of mentioned that he doesn't want to do that, but I think, you know, if you're thinking about, so they always quote this like Bitcoin yield, and the yield is basically the increase in Bitcoin per share for a holder, right? And so that's how they think about yield here. And so if you're trading at a discount to NAV, then it makes sense to issue to sell BTC to buy back stock, because that increases your Bitcoin per share. But I think there's more of a like that would be the financially engineered perfect way to do it. But I think there's also kind of the tribalistic, I'm not going to sell Bitcoin. The game is only accumulate. And that, like, you know, as far as he's always said that that's what he's going to do, but obviously you have a plan so you get punched in the face. And so who knows what happens when it actually trades at a discount.
Yeah, and also on the convertibles, like they have to hit the strike in order to convert into equity, or else it like stays as like a debt liability. So like probably there is some theoretical liquidation price, but it's got to be really low.
And most of the stuff is 0%.
Yeah.
So there's no like, you know, debt service issues.
But it's, yeah, MicroStrategy I feel like is probably less of a worry than like, as long as the market keeps putting these massive premiums on treasury companies, and they're going to keep on, like new ones are going to keep being announced. And I think in order to differentiate themselves, like some will take on more leverage, and then you get into a situation where you could actually like have to liquidate the Bitcoin, and this like negative reflexive loop. And like even some of like the Sol strategy ones have said like if they start trading negative to NAV, like then they will sell the Sol and repurchase the stock. So I think that it's kind of this thing, like this is almost like the new low float high FTV. It's like free money to launch these right now, and everyone is launching them. And a lot of these new ones, like their shares haven't even actually been issued, or like the new equity isn't even tradable yet. Like this SBET ETH Treasury play, which is up an insane amount, only has like 1 million shares outstanding or something, and they're going to issue like, you know, 50x that, like to actually fund the ETH purchases. So like it's trading at an insane premium right now, but like the shares, the new shares haven't even been issued and like are freely tradable. So that's going to like come down a ton. We're kind of in this like Goldilocks period of like these things trading at insane premiums, everyone rushing to do them. Like I've heard there could be ones for, you know, other major assets. So I think in the end, probably there's something's going to stop this, and that's probably when some of them flip to discounts, because you can't just like have this perpetual printing machine forever.
So I think you get them in every jurisdiction, right? That just makes sense because you tap into capital that can't participate in these. But I think, you know, thinking about what puts an end to these, not saying it won't happen sooner, but I think one really big test will be once the debt starts to mature, right? Because if you have this endless source of convertible debt that doesn't actually create any dilution, that just means they get to continue buying. And so as an equity holder, you know, for some prolonged period, you get to have increased yield, right? Like you get non-dilutive capital that boosts your Bitcoin per share amount. So that kind of keeps the premium going. And that is basically like one, you know, time bomb is going to be when the debt starts to mature, because
yeah, if the debt matures and it hasn't converted yet, then it's like, all right, like, are we going to issue new converts?
Even conversions though too, right? Like, they themselves would be a lot of downward pressure on price.
Yeah. So
yeah, so conversions would lead to people selling and potentially this trading at a discount, right? Which is what can then force them to potentially sell the treasury assets. But it seems,
and obviously that gets priced in
better.
advance, right? Because you like Bitcoin price somewhat reflects this bid. So like as that starts to come due, you anticipate there being front running of selling, and then you get the reflexivity downward.
It seems not as bad as people are saying, just given the fact that it's
here's
transparent. It's not crypto collateralized. It's collateralized by equity. There's like, I don't know.
The way, no, but this is the, I think the way it gets bad is that lenders who have been pretty tight on credit this cycle start like lending against these assets as collateral. And that's kind of how it could get dangerous, because that's kind of the GBTC thing, right? Is that it was used. It's not just the fact that it started trading at this massive discount. It's the fact that it was used as collateral for billions of dollars of loans in the.
So you're saying
crypto.
the equities will be used as collateral?
Yeah, like if people start borrowing against Master or all these other ones, right? Like if lenders start extending credit there, which I don't know. We'll see. I don't think they.
At least the brokerages are like pretty risk. Like maybe there's going to be some other way to do it, but like the brokerages themselves are like pretty like have pretty high margin requirements on these.
Yeah.
Things.
This one guy said once you get past 3 or 4, they can't get any. There's no new product offer and can't get good debt terms. I think that's like fair criticism that the later of these ones probably have worse debt terms than like MicroStrategy is going to have the best. That's the one, the most liquid. That's the one people like to own the most, right? So.
Yeah, eventually they're going to have to, like some of these are going to have to sell crypto and it could go in the other way.
Yeah. The counter is that a lot of these funds that really want to participate have concentration restrictions on single name issuers. So they have more appetite to deploy, but can't necessarily. And so as more of these pop up, they can just deploy into other areas.
True.
And it's got to be weird working at like MicroStrategy or like this SBET thing now. And like literally all your work like has literally no reflection in the stock price.
Yeah, but if you have equity in this SBET,
BTC.
you just your equity just went up 25x if you work at this company. Like you own the equity in 5 days.
Yeah.
Like,
but they're gonna get diluted by like 19.
Well, yeah, you can just sell it now, right? If you're an employee. It's like
Yeah. Interesting setup. I think SBET's losing like 4 or 5 mil a year. I guess it's pretty meaningless in the. It's like
a small number to lose. That you kind of want. It doesn't matter if they make money. It's just if they lose a little amount. I guess that's fine.
Mm-hmm.
Yeah, you allocate some portion of the raise to clean up the business to reduce burn go forward. Like if you have some debt or whatever.
I don't know. I said on the last episode I didn't think the ETH one would be that interesting to people just because there's the ETF. Do you guys, and I feel like the Sol ones will be more interesting because there's sort of no way to get that exposure on the market right now, like the Upexi and Sol strategy and stuff like this. Do you guys agree with that? Would you predict that those Sol ones are going to get more flows, or how are you thinking about it?
I mean, if the flywheel, one of the flywheel, we mentioned that one of the flywheels being buying discount, the other one being just the demand for convertible debt, which I think to some degree is going to be a function of asset volatility, and just bullishness on the asset overall. So I could see ETH getting some. I'm like, there's no way it doesn't get some, right? There's just going to be too many people. It only takes a handful of kind of buyers of the converts to then short the asset. So I can imagine they'll get some. I don't know if it'll be to the degree that like BTC gets. Yeah, ETH is because these things haven't really deployed anything yet, right? So all of this ETH strength is just front running.
Sol have the Sol ones not deployed? I think
they have, but not in massive size. So like you've had the announcements, right, that they're putting together like $1 billion shelf, but that doesn't mean they've actually raised the money. It's just the filing to do so.
Mm-hmm. Yeah, like do you think some of the Sol weakness is people selling Sol to then do this, or like to do the convertibles?
Potentially, I think like a lot of the meme stuff is falling off.
You think it's just unrelated?
I think it's two different buyers. Yeah.
The meme stuff is like falling off pretty heavily on Sol though. So like, do you think that I feel like that's kind of been one of the reasons that it's
hype too?
wrong.
Right. The vision was like,
Yeah.
Sol is where you build on-chain NASDAQ, and right now Hype is kind of taking the lead there, which I think is hurting the Sol narrative.
Interesting. Yeah, maybe do we want to touch on, actually maybe we can go to the Sol upgrade this week, or I think Plasma actually is a more interesting topic. I don't know if you guys looked at Plasma at all. I know we looked at it for ventures back in the day and past, which is maybe why I'm salty. But does anyone, like, I made a post on Twitter kind of asking like, what's the what can you, because I don't know if, for those who don't know, Plasma, it's sort of like a stable coin specific, like a stable coin chain backed by Tether, right? And the
Yeah,
idea, or what
kind
people are
of.
saying, is that it's like it's a hedge for the kind of, it's a hedge
Well,
to Tron,
it's
is what
like
people are saying.
an EVM chain that you can do free USDT transfers. So
And there's a few other things. The USDT is the gas token, and there's like some other like little things that people mentioned. But I think based on like there was a lot of views on the thread, a lot of people responded, and like none of the fundamental things were really made sense. Like USDT being a gas token, like you can do that on any L2. If there was real demand for that, people would do it, and you'd see it make a
no, this is basically
or gasless
Tether. No,
transfer
this
is the same thing.
is what it is.
Tether
Tether has
chain.
seen how much Tron is making
Yeah.
off of having the Tether chain, and they're just like, what is the point of having Tron do all these USDT transfers? We can just do all those themselves, and we'll just make those free, and then we'll build a whole like DeFi ecosystem around it. That's the kind of way I look at it. Like Tron is this weird outlier where they actually make money off of stablecoin transfers, but like in the long run, you're not going to make money off of stablecoin transfers. But it's something that like every chain needs to have. Like even take Solana for instance, right? Solana needs to be a good payments chain and like a good stablecoin chain, but the amount of money it's going to make off of stablecoin transfers is like irrelevant, right? It's incredibly small. So this chain is just kind of going one step further, and they're just straight up making them free. But all the other applications on the chain, they're still going to make money from. And so that's kind of the goal. It's like take all the transfers away from Tron, because why just give them all that money? And then we're not going to, and then if this DeFi chain becomes like, you get a lot of these interesting new apps there and everything, and then there's like more USDT minted and all this stuff. I don't know. They have like basically the brand to do this. I think people have kind of shown over the last couple of years that they don't really like, Hyperliquid is like got $3 billion in a 3-4 multi-sig. It's like people will use products that they like, and they like trust Tether. And so this is just them. Every single crypto app just ends up like verticalizing, right? It's kind of just you start successful in one area, and then you kind of just want to own like everything. And that's basically all this is to me.
Yeah. The left curve and right curve is like Tether chain good, basically.
Yeah, it's not like this chain is only going to be for stable.
Really well.
Yeah.
Apparently they're executing really well, kind of like a fintech company. Like they're really focused on payments. They've got like some big integrations lined up. A few people DM'd me saying that and a few of them are investors, but still they said that this is one of the teams executing at the highest level. And I think that's why all the hype is there. But yeah, I mean, I guess given it's the Tether chain at this point, it's going to do well off the 500 million ICO. Would you guys be bidders there?
Yeah, I mean, the ICO isn't really like a very democratized ICO. It's very much a whale game, right? It's like deposit stables, and you get points, right? And your points are a function of how long you lock and how much money you lock for. And so it's just going to be whales with cash that they're going to clean up on that one.
Do you have to KYC for this?
Probably.
Right?
Yeah, but if you look at like pull up the Tron chart, it's like literally just straight up and to the right. It's pretty incredible. Over like since like 2018, like it's obviously had some spikes, but overall it's pretty crazy. They make a lot of money off these stablecoin transfers.
Yeah, so I mean, I think getting the centralized exchanges to switch from Tron to this chain will be pretty easy. Tron does have some like decent lock in with this, like all this Southeast Asia and all this stuff, and so that might take longer to get people off Tron. But yeah, it will be interesting to see how Tron does with this, because you would think that's kind of like the main loser from this.
Yeah, Tron's higher than Ethereum in 24-hour chain fees. 2 million in 24-hour chain fees versus Ethereum 1.8, Solana 1.3. And it's just consistent churning.
I'm guessing this thing will get farmed in size, kind of like a Binance launch pool type. Like I'm guessing there will be like tens of billions farming this. And it's interesting. It's also a vampire attack on like USDC, in that you can deposit, I think it's USD and DAI. You can deposit USDC, DAI, USDS, or USDT, but it all gets swapped to Tether on the back end and locked. So, and you assume that like there's going to be some other games to play on the chain with Tether. Like, yeah, it could be a lot of, or especially for DAI, it could be a decent chunk of DAI that gets like converted here. And yeah, it's an interesting play. It makes sense for
I mean, who's
Tether,
actually holding DAI? That is like, I don't know.
I mean, DAI pays the highest. DAI pays like a pretty good yield, like SDAI or SUSDS or whatever.
True.
But yeah, there's a lot of people holding just naked DAI, which is hard to understand.
I guess if you have a lot of it, I don't know, liquidity. Yeah.
Yeah, I agree on the Circle vamp. It'd be interesting to see if this impacts their IPO price action.
Yeah, what is it set to? Because I know it was like set to launch at 5 billion, and then there's
I think it's around 5. Yeah, it's just there's too many headwinds. I mean, naturally, like, yeah, you want to be long stablecoins, but you know, interest rates come down, and like that's just direct margin for them.
There's no real other way. Like Circle's probably going to be the cleanest way for like the average person to play it, right? Like, what else do you buy to play stable? Like Tron, maybe. Like Tron.
I mean, you have this, yeah. You have ENA, you have Plasma Chain. No, but like it's not necessarily about playing it, but more so just eating into their business model, right? Which then becomes.
I also think that Tether is pretty hard to like get rid of their moat, but it's pretty easy to get USDCs. Like it's like an American regulated fintech stable, and there's a lot of those coming out these days. And people use Tether for a very different reason than just pure. Like a lot of people use Tether don't want the US, stablecoin. So
yeah, it's also a race to the bottom, right? Like in terms of, if someone offers a yield, then why would you hold this? And so Coinbase offering a yield is just eating into Circle's margin.
Yeah. I think it's stuck in a weird place for sure.
Coinbase really did a good job farming Circle.
Circle's so much like they have 60 billion in market cap. Like they're just so much further ahead of everyone else. But maybe that can change really quickly.
Yeah.
Yeah, but you price it on growth, right? If
yeah, I think there's like some pretty good network effects. Obviously, how much is Coinbase taking of the yield or of the earnings? Like, what do you know what the revenue agreement is between Circle and Coinbase?
It's a big
chunk.
Cost line item. Yeah, if you look at their S1.
Yeah. So, anyways, I think it'll probably do pretty well because there's no real other way for people to play it cleanly, like super cleanly. Like it's the clear number 2, and it's regulated American.
I don't know. Do you think those rumors? I mean, it was like so Circle was going to IPO, and then it seemed like there was going to be no demand for it, and then you had these rumors that like Ripple and Coinbase were going to buy it at like $9 billion, and then the next week they're like, "Oh yeah, we're going to IPO again." Like I don't know. Do you think those are like real rumors?
Not sure, but yeah, but wasn't the rumor that like 9 to 10 or 11 billion, like they're offering double the IPO price? That seems a little bit.
Yeah, it seems like something just to hype back up the IPO. I don't know.
I don't know, I wouldn't buy because it's just I think Guy had a good post like with stables you kind of want to be on the extremes. Like you either want to be the most liquid or the highest yield, and like Tether is the most liquid, the most sort of accepted, like the base collateral pair, the base trading pair for a lot of this stuff, obviously used for remittances and stuff. And then USD is the highest yield, at least right now. And USDC is kind of stuck in a weird spot where it feels like when it feels like the main bull case is just like regulatory capture, that they can get these, which they've been doing like a decent job at. And regulatory capture is an unfair way to put it, but just sort of making the regulations screw over Tether, right? Or enforcing like reserve requirements and stuff like this. But so far, it's been, these regulations have been pretty toothless. Like even in Europe, like the stablecoin regs, if it's like, I don't know, if you're trading on, I'm trading on some of these exchanges as a European, and they just like come up with these workarounds. Like now you're trading Binance credits rather than the stablecoin as collateral, but the pair is still USDT. Yeah.
Yeah, wait, so you're saying that like Circle at 5 billion, you'd rather own ENA at 5 billion FDV, which is what it's at, than Circle at 5 billion IPO price, even though Circle has like 10x the stable coins, like 10x the market cap of their stable.
Yeah, I think so. Yeah, I think I would, honestly.
That's interesting. Why? Like, I don't think Circle. Yeah, like it. I feel like that's kind of a tough argument. But
yeah, I mean, I just think it's I mean, for sure, like, sir, but I just think I can see a clear path for like USD supply to grow off just like the integrations, like they announced with Telegram today to like over 1 billion users. And you kind of saw like funding ticked up last week. I think it got to like 7%, and they added like 300 million or 400 million in USD supply. And
yeah,
like the amount of integrations they have now, like last time they added like, I think it was like one or 2 bill when funding ticked up. And now like capacity on Aave is like 3 to 4x. They have integrations everywhere. Like PT is collateral on Aave too. Like I just think if you see a real funding cycle, then this thing will do really well.
That's the thing, is like, I think the environment is right now best for Circle and worse for Athena, right? As interest rates come down, then funding will likely tick higher, and the revenue source for the two are inversely related, the revenue source for USDC and Athena. So if we think over time interest rates come down, then that's just going to directly eat into the top line.
Just been like a pretty, like, won't the basis trade just kind of get arbed down to whatever the interest rate is, like, over time? Like, I kind of feel like we've seen that this cycle a bit. Obviously, there's still periods where it's hot, but
yeah,
I don't know. Just with 10x,
part of it is the fact that like these exchanges, their baseline funding rate is 11% or 10%, right? So like just that on its own, I think puts in a floor yield.
But I thought the USD yield was like 5 or 6, or had dropped to like 5 or 6. Like, wasn't it mostly in treasuries recently, or like a couple months ago?
Yeah.
When
funding's below the treasury yield, they just move to treasuries, and it's been like pretty flat for a few months now.
Yeah, Jason sent us a message. So it's a 50-50 rev share, while Coinbase keeps 100% of interest earned by USDC on their platform. Okay, that's pretty fucking. That's hot.
Yeah, like if you look at the earnings, they're trash. It's like if you got to pull up. I'll get the S1. Like they earned so little in terms of cash on this revenue.
Like an agreement forever? They signed that, or do you think that expires at some point? I don't know. I just think they're in a really good position as the number 2. Obviously, Tether's in a fantastic position, but like in terms of the number 2, like order of magnitude higher than the next competitor. And
the thing is, like,
well, the question is like where people. So who owns Coinbase owns the user. Kraken's eventually going to go public next year. They own the user. They're probably going to have a similar agreement with Circle, right? So like Circle max extracts when people hold Circle when people hold USDC on chain because they're not paying crazy vig to these exchanges. And so, you know, there's definitely a bunch of people who hold USDC on chain, right? And that's where their margin is. But for the most part, people are holding USDC on exchanges. And then as you shift on chain, you probably shift into other sources of stable yields. So like,
yeah. Well, I think it's like, where do you see like the more stable adoption coming from? It's like, I think if more enterprises and stuff adopt stable coins, USDC seems like the obvious one, right? Like if there's regulatory concerns around USDT, like probably gonna go USDC, like for commerce and general adoption. And also,
why would you use that over PayPal's? PayPal's been around for like a long time.
Of course, but PayPal is at like a sub billion in their PayPal stablecoin. So we'll see. I don't know. I just think that
I don't think it's sub billion, but yeah, it's a lot smaller. But like Coinbase just did a deal with PayPal as well, and so it's kind of like, who has the bargaining power here?
Yeah.
PayPal it's only 850 million.
Really? Wow,
Yeah,
that's way smaller than I thought it was.
At least on CoinGecko. Anyways, so Circle is 60x that.
That's
I just don't
why
think
I think you either want to be like highest yield, where you use as a treasury asset and people just use you in the back for whatever their stable coin is, or you want to be the most liquid and have the most distribution. And it just feels like,
I think Coinbase is that, like Circle. I mean, yeah, like Circle, USDC is that in the US. Right?
But they eat there's like very little of that value flows back to Circle.
Yeah, those agreements are like, I
mean, the exchanges own the user, right? And so they're gonna have, I think, that continued leverage.
Do you want to move topics? I think we
let's do it. Let's do it.
Gone through this.
So do you want to talk about the Sui hack? I feel like that was pretty interesting.
That or Solana upgrade.
I think the Sui hack
the Sui thing is like, I don't think it's that big of a discussion. Like, I'm not really surprised. Sui is what, 2 years old. They got 200.
But you want to, maybe we give the context a bit.
Yeah.
I don't know if everyone. So yes, the CETUS, the largest DEX on Sui, got drained. I think it was like 250 mil, something like that. It was your basic like overflow bug that Move was like supposed to be immune to, but obviously now we found out it's not. And I think Mistin has said they're going to invest more in security, which is pretty good. And then I think they only managed to swap out 60 million to Ethereum, to bridge 60 million to Ethereum, which is surprising to me. I don't quite know why, but the same day, within a few hours, the Sui Foundation, the CETUS team managed to get the exploiter addresses to basically it's like managed to upgrade the small config file to the validators that ignored transactions from the
basically they told
address.
Validators, you're not processing transactions from the hacker.
Yeah, and it's interesting because this would require a hard fork on like most other chains, but Sui validators, I think, synchronize software every epoch, which is like 24 hours. So this was kind of a hard fork, but without requiring a hard fork. There's just this one address screaming into the void. And now there's like a proposal. I don't think it's been voted on yet, although when I checked, it was like slightly over 50% in favor, which if it passes, will execute like a counter exploit. It will unlock the frozen coins, transfer them to a multi-sig controlled by CETUS and Sui. And then there'll be like a way for victims to claim for reimbursement. I don't know. It's crazy to me how, I guess the most surprising thing to me about this is how uncontroversial it was compared to what these things used to be in crypto back in the day, like whether it's the DAO hack, or even like the Blast one where there was the bridge hack and it was like a multi-sig. Like there was so much more debate. I guess for these new chains, people just do not care about decentralization. Like this ethos is kind of like dead, I think, amongst the newer generation of chains.
Well, I think the nuanced way to look at it is like, so people say this is no different than like there's no censorship resistance because they're blocking a hacker. I think that misses a lot of nuance. It's like you did need to get 100 validators to like agree that this hacker who stole $200 million should be blacklisted. It's still going to be a lot harder if like there's one person that Sui for whatever reason wants to like censor and they get all the validators to like run this. You know, they're going to be like, well, why would we do that? Right. This is like an easier case to do it. So I don't think that it's like completely it's not like using a single bank, right? And everything is like behind the scenes and they can just choose who they don't do business with, right? Like everything is still out in the public. So everybody knew they were doing this.
Well, in a private Discord group.
No, I mean like the decision, right? If they ever release new software that blacklists people's addresses, people are going to see that, right? It's not going to be some shadowy, like behind the scenes thing that, you know, when people's bank accounts get frozen, all this stuff, right? I think, listen, Swee's what, 2 years old? This has happened early in networks. Like people have forked like this in the past. I also think that Sui has never really pitched themselves as like some censorship resistant one, at least not that I think. Like I think it's pretty clear what they are. They have 100 validators that are KYC'd right now. They're going after like gaming, and they're basically like a Web2 team that is kind of used to all this. And so
Yeah,
for Sui to do this, it's like, I don't think it's too surprising. I think you could, and so listen, there's people out there that want this, right? Like
I think it was probably the right thing to do.
Yeah, like all the
100% the right
depositors,
thing to do.
all the depositors are like, it's 20% of the chain's TVL. Okay, you can't just let like this.
No, I mean, like not doing it would satisfy this fringe, borderline pedantic minority that aren't even in the ecosystem that are yelling they shouldn't do this. Like those are the ones that are mad that they did this. Everyone who's involved is for this. Because, again, yes, not some unilateral thing that one person's deciding. It's a consensus decision among everyone.
I just think the main thing, the main thing for me is that like ETH is really the only chain that I think I have confidence ETH1 cannot do this. Like I think every other new chain that you have your assets on, regulators or whoever has a problem with you, I think it's fair to say they can like exert enough pressure to freeze your assets.
I don't know.
That's kind of like
disagree.
a big value prop of of
I think
blockchains.
that's a big stretch that people are trying to make as like this
Right.
case for Ethereum.
But
Like,
that's
it's the only one.
I would agree with that.
There's a lot. That's no way.
But that matters. Dude.
No, like one government could force Solana to do this.
The U.S.
You don't think so?
Yeah,
No.
Solana also has home stakers, as much as people don't want to believe. Like not home, like in their home, but
Solana would be way tougher.
had-
They have way more validators too, and yeah.
it's like
As in
I think that
distribution
people
of
are
stake.
taking this as, to my point, like they want this to be true that Ethereum's the only one that you can do this for, and so like
You don't think that's true?
I mean,
I
with
don't think
North
that's
Korea
true.
washing assets on Thorchain and nothing happened.
Yeah.
Like North Korea is arguably the worst actor possible to be doing this, right? If you're thinking from the government's perspective. So if they're not coming after somebody for that, then like they're not going to come after them.
But it's just different incentives, right? Like in that case, the validators are generating fees from the activity. In this case, the validators would get the SUI dumped on their heads, right? So I think the incentives are.
I mean, a lot of
different,
validators, at least in Swedes, are just get delegations though from like Meston.
They still have a SUI denominated cash flow. Like it's yeah. I mean, everyone's long SUI.
I think it's a stretch to say. I think like obviously Ethereum is the most censorship resistant L1. It is a big stretch to say that Ethereum is the only chain that you can't do this on.
So which other do you think?
I don't think
validators couldn't coordinate quickly to. Yeah,
I don't think you do this on Solana, and Solana eventually it would get through. Just like on Ethereum, you have validators that would process this eventually, right? You just have to wait a bit longer till that kind of leader comes around. But there's enough, individual validators on Solana that eventually these would get through. And that's all you need. You need one, right? This is literally all 100 decided to like. I think it would be hard to have Anza.
You'd need a hard fork, I think, on Solana
to release new software saying that we're blacklisting these addresses and get 80% of validators to run that software. I think that would be kind of tough. Maybe they could do it. I don't know.
Big enough, probably.
We'll see.
I
Everyone
just think
agreed it was in the chain's best interest.
But then it's also like, what does this have to do with price though now?
Well, I think a lot of the like value prop of crypto is that it's like dissident tech, and like it's for capital flight away from corrupt governments. Like there's definitely a lot of assets in crypto that are people like.
Yeah, but this wasn't even
But
governments. This was social
yeah.
consensus. This was the foundation and the validators deciding this is.
I know,
No,
but the fact that
in all
this can
those
happen-
value props that you're describing, would you see the 100 validators coming together and blocking your transaction? You know, safety from governments, et cetera, et cetera. Like, do you think the 100 would come together and block it?
I think there's like it's possible, yeah. Like let's say there's a big US like Roger Ver type guy who's convicted of tax evasion or something like this, and his assets are all sitting on a blockchain on an address, and the US subpoenas all the validators and says, I want you to upgrade your software to exclude this wallet. Like the reality is, if for a lot of people, like this is the use case of crypto, and why would you leave assets on a chain where this can happen if you can have them on Ethereum, where you're way more guaranteed that this can't happen? That's like the
I mean, if you're gonna make more money on that chain, and is it literally zero risk to have this like
for sure you'll put some assets on there and like play you know, like ape some coins on there and stuff, but like for the majority of your wealth, and I think a lot of like a long tail of not a long tail, a short tail of extremely rich users will choose Ethereum or something like it, where this can't happen.
Something like it. But I mean, I guess you could argue maybe back in the day, Solana would have been in the position where they could have been done, but now it's not, right? And so it's this whole process of kind of gradual decentralization, and you know, you think about the decision that's best for you at the time to get to this end state where you can't do it.
I just think this is fine in the world we're in now. Like there's if the stuff that Bitcoin Maxis and Arthur Hayes and like a lot of these people talk about goes down, where there's actual fiat currencies collapsing, there's bond markets going crazy, and like governments are literally fighting for survival, which is like, to be honest, like the bull case for crypto, or at least for a lot of this stuff, then you have to assume like adversarial conditions, and like a lot of these chains are not resistant to those environments.
So if you're thinking, you know, in terms of mass asset protection, it kind of goes back to the whole barbell argument for stables, but here for security, right? If you care about security more than anything, then you're going to go all the way to BTC, and then on the other side is kind of functionality.
But you might want to have stables, right? You might, yeah. I mean,
how do you have stables when the governments are going after?
Well,
yeah,
censored too.
I don't know.
You can have stables in Aave, like they're gonna, you know, there's like if you have stables in Aave, I mean, they have to censor the entire market, right? Like there's you can wrap your stables like
right, but you're talking about like this World War III scenario, so. Why would you hold Circle USDC?
I would not, like, yeah, that's fair. Stables are probably a bad example.
So it's just going, it's only the native asset. That's the only real thing that you would hold. And so then it's just like BTC versus ETH. And this is the thing about BTC. It's just, it does one thing well, and it's like censorship resistant. And like, if this whole World War III thing that people always talk about, listen, man, if World War III happens, you know what I want to do on blockchains? I want to send money back and forth. I don't want to eat perps.
It doesn't have to be World War III. Yeah, there's a lot of scenarios that aren't World War III where governments get super PvP.
Yeah, but
it's happened like many times.
This is the thing. The reality is that
in the last century.
The reality, in my opinion, is that Bitcoin, if you ever get one of these scenarios, is what you want, and then all the other use cases in crypto are like good time use cases, and like they're democratizing, you know, products, like they're democratizing private banking products and stuff like that. And so those are kind of like the two. It's really the money industry and the tech industry. And, you know, I think that if Ethereum is only building to be this like backup Bitcoin with a little bit more functionality, it's like, I don't know how much of that functionality matters if you really get this doomsday scenario. You kind of just want money to like send back and forth to people.
I disagree. Yeah, I disagree.
What would you be using if like...
Dude, it's hard to talk about like without sounding like an idiot to talk about these scenarios, right?
No,
Without sounding like a
I think
conspiracy theorist.
it's legitimate.
But
I have a question for you, Jose. If so, on Ethereum though, like let's say they wanted to force something, could they not just like fork Ethereum and be like, we're honoring the stable coins on this new fork, and it has to be compliant with like these government rules, right?
Well, they don't get the choice. If it's a centralized stablecoin issuer, they get the choice basically.
Yeah.
Although I actually don't necessarily agree with that. Actually,
yeah,
I
there's
do
been
think-
various counter arguments against that. I think
I do-
Hasib initially made the post about this. I think there's been a lot of valid counter arguments.
I do
to
actually
it
think
as
that
well.
Circle would be forced to use whatever chain social consensus wants them to use, because then they kind of just like nuke their entire business.
Yeah,
They
but
don't
if the
follow.
government's telling you,
Well, then their business is just dead. Like if the government is going to just decide to kill Circle's business, then like
well, I think that's like the magnitude.
I just think in a world where, like, if you really get a world, I'm not saying World War III, but a world where you just have less trust. It's more multipolar. Like fiat currencies are dog shit. Every country is in some form of, or like most countries are in some form of debt crisis, like inflation. Then you'll want to send money, but you'll also want to do various types of financial transactions, deals,
Sure.
loans, escrow contracts, like all the stuff that we initially wanted, like Ethereum and like blockchains for. And to me, the credible one, the only one that you could credibly do this on right now is ETH, and then probably Solana is the second.
Right. Well, that's the thing. It's kind of in this weird in between where if you're focusing on money, you just go a little bit further to the left on the security spectrum.
But
And
Bitcoin,
if you want
thing,
utility,
you don't just want to hold gold, right? Sorry to interrupt. Yeah.
Yeah, no worries. But then if you want like activity and utility, then you kind of go a little bit further to the right on Solana, and you basically have near equivalent level of security at this point. For all intents and purposes, right? Like neither one can really be shut down by one entity.
So. I mean, Solana is definitely like more of a Discord group situation than Ethereum, right? Like even the way, the impressive way in which they've coordinated these restarts of the chain, like the speed at which you do it, like all these validators are a Discord group away. Like that's kind of been shown, I think, a couple of times. Like on Ethereum, I just don't see how you could do that.
Yeah, but why is
and
that
there's actually like 3 different clients. Huh?
Why is that a critique that like Solana is able to, has like good coordination when like shit hits the fan? It's like if there's like some bad bug, do you prefer that like if there's some really bad bug in Ethereum that nobody can coordinate to fix it and then everything kind of just gets fucked?
Well, it's just the whole point of this stuff is that no group, especially not like a group small enough to coordinate through a Discord group, has enough control on these systems to be able to like change them. That's like the main, for me at least. I think it's definitely not the case now, and as investors you have to adjust. But that was like the initial point of these systems is that you can't do that. Like it's yeah. I get that you want to have like this Web 2 like experience where there's a bug, people can patch it quickly, but this is why Ethereum moves so slow, right? This is why like everything gets tested and formally verified, and there's like all the people making fun of the ETH research people and stuff, is because these are their values. Their values are you don't want to have a bug, because if you do, it's hard to coordinate to fix it. So you just have to avoid it. Whereas all these other chains are like moving quick, more towards the spectrum of move quick and break things, which has allowed them to implement features more quickly and stuff. But I do think in a truly like scenario where blockchains are needed, like Ethereum is the one that most people would want to go.
Could you argue that there's coordination when it's towards a single goal that everyone agrees is productive, right? And that's when you want the coordination, and then you don't necessarily have it when there would be dissenting opinions, whether it's censorship or whatever it might be. And so like you have coordination when you need it, but then you have the resistance and decentralization also when you need it for these kind of unique events that are more opinion driven.
I mean, listen, every main Solana stakeholder wanted them to pass this inflation reduction proposal, and it didn't go through. Like you had Toli, you had Mert, you had Multicoin, you had literally all the biggest Solana voices, and it didn't go through. And so I think it's like when shit hits the fan, yeah, it's easier for people to come together. I'm not so sure that it's a bad thing that people can do that. And I do think that Solana should not decentralize too quickly at this point still. They're only 5 years old. I I actually don't think that they should kind of be accelerating towards being super decentralized at this point. But I do think over time, eventually they'll get there.
It'd be good to touch on the upgrade.
Yeah, the upgrade is just new consensus algorithm. So they're getting rid of proof
It's like
of
the
history.
biggest upgrade ever to Solana. Like the biggest
Yeah,
change.
they're stripping
by
out.
far.
They're stripping out. So they're keeping Turbine. They're stripping out Tower BFT. They're stripping out proof of history, which was like this checkpointing thing. I remember Liam from Firedancer a couple of years ago. It started talking about how he thought proof of history was kind of bullshit, and then maybe not bullshit, but just like didn't exactly give the guarantees you thought it did, and was kind of like redundant. But what I find super bullish about this is that in 2023, these guys from ETH Zurich wrote a paper on how to like exploit proof of history in Solana. And it was like it was like, a 4 validator set, and it was in like test environment, all this stuff, whatever. And this went all over Twitter. The guys who made this new consensus for Solana are those guys who wrote that paper. So Solana literally hired like these ETH Zurich guys, got them to write the new consensus mechanism. And I think that's pretty bullish because instead of just like pushing away critics, Totally actually reached out to them, started talking to them, and be like, okay, let's get these guys on board and let's fix it, right? I think that's kind of the mentality within Solana, that they have this very pragmatic mindset, and they'll deal with, if you critique. The other thing too in Solana is that you see the engineers shit on Totally a lot too, right? Whereas I feel like in Ethereum, maybe recently it's changed a little bit, but at least historically, you can never say anything bad about Vitalik, right? And so it's just like a very different mindset where they are pragmatic. They do want to fix stuff. If you come with like a critique and it's legit, like they'll look into it and make it better. The other thing that this upgrade removes is like the on-chain voting. And so this is good because, every Solana validator has to vote on every single
It
block.
removes like 75% of the transaction load, I think.
Well, that's one thing is
voting.
like this, there's this whole, the TPS numbers are high. That's one thing that's like pretty immaterial to me. But the main thing is that like, this is better for smaller validators, right? Because every single validator needs to vote on every single block. And so if you're a small validator and you only have like 0.1% of stake, then you're only earning rewards on 0.1% of you're only the leader for 0.1% of blocks, but you have to pay the same sole expense as every other validator, right? And so that's like that's like the kind of centralizing thing with doing on-chain voting is that, and I wrote about this when I wrote about Solana a couple of years ago, actually literally 2 years ago to this date. Where like these vote fees are very centralizing, because whether you have $1 billion stake or $1 million stake, you have the exact same expenses, right? And so this will be good for that, getting voting off chain finally. And yeah, they said it's going to go live early next year. We'll see. Like these things always take way longer. And Solana now is not at the state where switching consensus while it's running, it's like a lot riskier, right? Because they have a lot more assets now. They have like 10 billion on them, and people are using it literally all the time. So yeah, we'll see. That's going to be tricky. That's
I think I saw some analysis that the break-even validator stake went from 5,000 SOL to like 450 SOL. So it's pretty meaningful for like smaller.
Yeah, it's mostly now just your actual cost of like hardware and bandwidth and all that.
And you also get to sub 200 milliseconds, right? With this new consensus.
Yeah,
like, I think it's going to be
150. I think is what they're going for. They also have it's like, so in most BFT systems, you have like a 1/3 safety guarantee where like up to 1/3 of the stake can be Byzantine or like malicious, and then you'll cause the chain to essentially halt. With Solana, the new consensus, they're pushing that a little bit, where it only takes 20% of stake to be malicious for it to halt the chain. But I think the trade-off there is that they're able to get like way faster finality and latency and everything. So they're kind of playing with that decision a bit. Like this 2/3 thing has always kind of been the the number that people use, right? And they're kind of pushing that a bit to yeah. There's some like technical nuances that I won't get into about like when blocks finalize and all that, but it moves it from like 12.8 true finality to like 150 true finality. And this is just important for like if you think about a market maker making on chain, the lower latency, like the lower finality times, the tighter your spreads can be, right? Because you have lower risk of somehow getting like some small reorg or getting picked off or whatever.
Yeah. Do we think it's like the hype eating into Solana narrative is real? Like, because the
I think
decentralized
there's
Nasdaq
like
thing
parts of it.
seems, because it's hard to. It does seem like there's chain, like perps is one of the use cases where clearly app specific stuff is useful. Like even the ability to cancel orders and stuff like this is super useful. It's hard to see Drift or some of these, and I really like the Drift team, but competing with Hyperliquid here. And if Tully's right that the biggest use case of blockchains is just minting and trading tokens, then is Hyperliquid, or I guess like Fogo, which is like Solana with some app specific stuff, is that the right design?
I mean, Hype is definitely, this is a tough one. Like Hype has definitely taken a lot of pure trading activity from Solana, but Solana is still kind of like the launchpad.
Yeah,
chain.
I think the narrative can be on the AI side too. It seems like a lot of your AI projects are choosing to launch there.
I mean, the Hype EVM does 2 TPS right now with a theoretical max of 7. It's like, the Hype EVM, getting that up to the speed where Solana is a massive difference, right? Hyperliquid just crushes Solana when it comes to perp trading and stuff. And so they're pretty different products, but maybe the same bucket of capital allocates to these, right? But they are like pretty materially different products. Like Hyperliquid is not trading at where it is because it's like it has this general purpose L1. It's trading because of the perpetual exchange.
Yeah, I'm definitely a hype bull, and I think it'll continue to do well, and then at a certain point it'll kind of reach price parity, and then the next leg up is basically this transition from valued as a DEX to valued as a chain. I like Hype EVM, like I've used it. It's kind of but yeah, like obviously Hype itself is great. I trade there a bunch. And so then once that kind of reaches fair value, whatever that is, based on volumes, then maybe you see some flows back. But I don't know that it'll ever be able to get that L1 premium without massive tech improvements.
I think the tough thing for Hype is that they're probably they're at the point now where they've taken all the DEX per market share, and they've taken like a decent amount of the centralized exchanges, but to actually start getting more material into there, it's going to be pretty tough for them because it's still like totally public perp exchange.
Yeah, I guess we'll see. Like they have like their numbers have been just like been insane. Like I'm trying to pull up the dashboard, but I think they have like more. Yeah, there's a good one. It's something like Hyperflow, but it basically shows versus sexes and volume, and I think they have like as much OI as OKX, like 40% as of Bybit, 20% of Binance, like, and it's kind of going vertical, especially after all this like James Wynn stuff. The guy had the $1 billion position on chain, so it's still growing really quickly. I don't know if it's reached saturation yet. Like we haven't really seen it level off yet.
Yeah, it helps that it has that built-in bid too from the fund just buying Hype. Obviously, it doesn't move the needle as much as it used to because of the size of Hype, but it's still a non-negligible amount of buying into the market. So even during lulls where you don't really have new supply hitting the market on Hype, you still have this kind of bid that provides a boon.
Yeah, I found the website. It's hypeflows.com, and the open interest like kind of slowly grinding up to about 9%, and then just since the start of May, it's at 14% versus all sexes like aggregated. So it's really just gone exponential in the past like month or so. So I don't know if it's reached saturation yet.
Yeah. I don't know. Do you have anything else we want to talk about? We've been over an hour now.
No, I'm good. Do we have any legit questions in the chat? They're
Not
asking
really.
how many gold antiques Duncan has buried in the backyard for store value.
I think gold is good in case. Oh, what's this whole quantum computing thing that could break Bitcoin? Like,
That's pretty far out. It's definitely worth like paying attention to, but quantum computing. I listened to a good pod with A16Z a couple weeks ago. It's going to take a while. It's like worth thinking about, but not making any rash decisions over. The thing with Bitcoin is that a lot of these, like any system, like basically when you have quantum computing, you need to move to a new signature scheme that's quantum resistant. And so that's easy to do if you have the keys, right? The thing with Bitcoin is there's just like a lot of lost keys, and there's like Satoshi's keys. So those ones, you literally can't move them to something quantum resistant. And so you can always do like some manual. But then it's like, is Bitcoin going to essentially burn those coins at one point, right? When you get quantum computing, and it's a decent chunk. But are you going to like, is Bitcoin going to burn Satoshi's wallets? That's, I guess, like kind of the interesting question. Is that like bullish or bearish, right? It's like you're taking off a big amount of supply, but like that supply is already effectively taken off anyways.
Yeah, I think people right now, the ongoing assumption is that those coins will never move. I think that seems to be the ongoing assumption.
But once you see the move, it's like, oh shit, China cracked quantum.
Yeah, and then that's their prize. Hopefully they hodl.
And then when that happens, the rest of the world. Then when that happens, the rest of the world breaks. Because every government secrets are just cracked. All your banking is cracked. Everything. So once the Bitcoin moves, the world knows, oh, we got to upgrade now.
Then you got to go pillage Duncan's backyard for all that gold.
Yeah. I don't want the gold. I want the statue head.
Yeah. So have a little bit of golden food in case that happens, guys.
All right. I think we've gotten to the useful end of this.
The last thing is I looked up the Circle thing. So they have the revenue sharing agreement with Coinbase. They signed it August 2023 for 3 years, and then they have the option to extend it another 3 years. So like potentially they could like renegotiate that at some point in the future, and that could be pretty bullish. But obviously, like you guys are saying, they own the user. I just think at 5 billion, it doesn't seem that bad. If this is like the one thing that everyone is consensus on, like stablecoins are going to be fucking huge, and you can buy like the second biggest stablecoin that's like still growing pretty fast.
Yeah,
rated in the US as like a long-term thing. I think it's not terrible.
Yeah, that's fair.
Yeah, I mean, I'll agree that it's not terrible.
Okay.
Would you rather own? I think you have some other equities that you'd rather own. So
yeah, but I think it could be good. Anyways,
cool. That was good. That was good. I thought doing it live was fine.
Yeah.
Yeah. Thanks for listening in. If you guys are listening live.
Yeah, if you're still here.
This guy said, imagine putting a long-term bet in the Farcoin chain rather than the institutional chain. This idea that Ethereum is like the institutional chain, it's like pretty not true to me. It's like these funds and everything are launching their assets kind of like everywhere. I don't know. This feels like a longer debate.
I agree with that.
Yeah.
I think that's a bad argument for Ethereum.
That's also not. That also goes totally against what your like whole rant about Ethereum's use case was too.
No, I think most of these institutions are just seeing this as like new markets to tap into. Like these assets, most of the assets they're issuing are permissioned assets anyway. Like they don't care what chain it's on, even if they freeze their address or whatever. Like this doesn't matter. They're holding the stocks or the bonds or whatever. Like I think most of the use cases that people talk about have no use for a chain anyway. They're just using it to tap into new users, new markets, new assets. Like
Exactly.
I think I don't think it goes against my argument for Ethereum. I think my argument for Ethereum was slightly different.
I just think it's like different. Yeah, it's a different bull case, which I don't agree that's the bull case for Ethereum, anyways. But the one this guy's saying, because yeah, institutions are just going to go to where the users want it at the end of the day.
Until
clear.
yeah, until like security matters, like, and you know, I agree.
But in what way? Even if like they always have the authority to just freeze their assets.
What do you mean? Yeah, but yeah, for sure. For like RWAs. Yeah.
All right.
RWAs, for
All
sure.
right.
Anyway.
Yeah. Let's not go down to the rabbit hole.
Yeah. All right, guys. Thanks very much for joining us. We'll be back in 2 weeks. Maybe we'll do it live again. I don't know.
We'll see.
We'll see.
It's a lot of coordination.
I feel like it was pretty similar to
not too different.
live.
Yeah.
We can get some better comments. Well, I haven't looked on YouTube. I'm just seeing there's nothing on Twitter that I can see.
Yeah.
You know that the comments. You know that the comments show in here, right? In the StreamYard feed. Yeah, and they come in from both YouTube and Twitter.
I didn't see that.
Yeah.
Oh, really? I didn't see that either.
Real person here, late to the party.
Yeah.
Solana's going back.
All right, guys.
5. Look at our chart.
I'm gonna end the stream, but yeah.
Hey, guys.
Yeah, everybody.
See ya.